Manav Chopra of Indiabulls Ventures is joining us in the show right now. Along with him, Brijesh Singh of Stock Access is also here. Gentlemen, good afternoon to the both of you. Let's start off with your index views. Not being able to hold on to the early morning gains, down by 0.25% right now. What would the strategy be? Manav, first to you. Manav? Okay, I don't think Manav can hear me. We'll try and patch that line. Brijesh, let's start off with you then.
Good afternoon, Devina. See, no doubt, Nifty from a level of 11,300, we have seen a rally to the level of 11,545. So almost roughly around 240, 250 points upside has been seen. So there would be a profit booking. We can't rule out that. But overall, still the trend for a short term has been concerned. Still a little bit to a bearish side, I would be saying. Or in other words, it would be a profit taking would be coming on a higher level. But on a very short term time frame of the chart, what I was been looking when I posted my Nifty strategy, I was been thinking if any rise, if it comes somewhere around 11,490, one can go for a sell side. And with the stop loss of 11,525 and play for the target of 11,425. Now, since we have seen a sharp pull down, and right now Nifty has been trading somewhere around 11,460 zone. Again, the pressure from the higher end, we have seen the increase in volume. So the little bit trend has been down. I would be saying, and same strategy I would be keeping. If it rise somewhere around 11,470 or say 11,475, one can go for a sell side, revising the stop loss from 11,525 to 11,510 and play for the target of 11,425 to 11,430. If closing is below this level of 11,425, then the next level to watch would be 11,370 mark.
Okay. Do we have Manav back on the line? All right, we'll try and see what if we can get him back sooner. But let's keep it with some stocks then. Brijesh, your stock ideas for the afternoon?
See, two calls are there, one on a sell side, one on a buy side. The first sell call would be BEML. On a hourly chart time frame, the stock had made the lower highs formation, which is indicating the sell signal with increase in volume. So somewhere around 970, the stock has been quoting. One can initiate the call or any rest till level of 975 with the stop loss of 995. Play for the target of 930 and below that also somewhere around 910 also it would be the next level. But till 930, one can see assume as a target. Second call would be a DCB bank. The stock on a shorter term time frame has been still trading with higher tops and higher bottom formation, which is giving a bullishness view. Right now the stock is quoting somewhere around 204. So any dip somewhere around 202, one can take up as a buy call with a stop loss of 192 and play for the target of 220, 225. Time frame to hold this counter would be a 1 week time frame.
Okay. Yes Bank, as I was mentioning, has moved past its 200-day moving average right now and is looking pretty steady. Though not at the highest point of the day, you had it, move up almost a percent and a half higher from these current levels, but still no one's complaining. 266 in Yes Bank, breaking the 200-day moving average currently. But does that put it in an overbought situation, at least with regards to what the RSI indicators are showing? It has been trading within the overbought region for almost a month now, so it's sort of consolidated at these levels within the overbought region. Current RSI reading of about 74. Brijesh, what would you do with Yes Bank? Do you feel it's slightly overbought right now? There could some selling pressure could come about?
See, Devina, no doubt that we can see a selling pressure or a profit booking because the rally had started from a level of say from 180 and it has moved to the level of 266. But prior to that, the stock had been consolidating in the range of 220, 225 on a downside, followed by 250, 252 on the higher side. And as we see the RSI has a tendency to remain overbought and oversold zone for the longer term time frame. But the price are indicating the strength. And right now, if someone has missed the rally, they can use for a buy side rather than going for a sell side. So not at this juncture I would be suggesting, because since on a shorter term time frame we are looking some selling pressure. So somewhere around, if it trades below 260, one can take a buy call with a strict stop loss of 245 and play for the target of 285, because the 285 was the previous important level when the stock has been beaten from a level of say 400 plus. So 285 is a long term time frame of the chart. If it gives closing about 285, the stock would be coming out from a bearish zone to the bullish zone. So I am looking stock touching 285 in a 2 month to a 3 month time frame. But at this juncture, I would be avoiding anything below 260 can be used for accumulation purpose.
Okay. Manav Chopra with us as well. Manav, good afternoon. What's your stance today on the markets for the next couple of days? A bit of a pullback. Would you, if you had some profits on the Nifty Bank, take the money off the table, or would you stay long?
Absolutely. I think you've nailed it, Neeraj. We have this stance where we have published a view stating that it's a good time to book profits, for a simple reason that today you see Bank Nifty has formed a higher high and the Nifty index has not done so. So this is called a divergence pattern, and usually such kind of a formation leads to some sort of a consolidation or a corrective decline in the market. And looking at the formation that we've seen today, a slight tilt also on the breadth of the markets overall is indicating that in the near term there could be some sort of a pause going forward. And at the current levels, I think the risk reward ratio is also quite favorable for booking some profits. On the upside, for Bank Nifty, 30,300 would be the resistance, and on the immediate basis we see support at 29,500, and only a breach of 29,500 could witness some sort of a profit booking, at least in the near term perspective. For the Nifty, it would be 11,300 would be the short term support levels.
Okay. Manav, it is a good call on the Nifty Bank, by the way. A few days back, it's nudged your targets as well. So good going there. What about specific stocks now?
At the current levels, we have two ideas. One would be buy on Repco Home. In fact, we have seen a very good momentum coming, at least from the NBFC space, and Repco Home, in fact, after a good short-term consolidation, has seen a very good breakout today on the daily charts, which has also accompanied by good amount of volumes, and the prices are tagging above its weekly resistance level. So I sense, at least in the near term, this could be the stock which could see some sort of an outperformance, and after a good long time, the stock has also managed to close above its 100 EMA. So overall is pointing quite good. In fact, if you also look at the delivery volumes of the stock has improved significantly in last couple of trading sessions. So I sense, at least in the near term, we could see a rally of 500 in Repco Home. And I would also want to initiate one sell that would be on Jain Irrigation. In fact, the stock has been a complete underperformer in the markets recently, and since we are also expecting a neutral stance on the market and some sort of a consolidation, I think basis of this, the underperformance.
Right, I think we've lost Manav's video there, but few of the stocks that he was talking about, we'll watch out for them. Just want to quickly highlight his strategies once. On Repco, he's got a buy call. He's placed a target of about 500 on the stock with a stop loss of 455, and he's selling Jain Irrigation. He's got a target of 52 rupees in the counter and a stop loss of 59 rupees. Let's get in one more important voice then. The predictability of returns from large cap banks would make them a better bet than mid-tier banks, says Andrew Holland of Avendus Capital Alternate Strategies in a conversation with us earlier on today. He also spoke about the nature of the recent foreign fund flows into the Indian equities. Listen in.
Two things. One, our funds are more domestic, but we will be launching, offshore very soon. It has been, you're correct, it's been more ETF passive money than it has been active funds. That's for sure. And the active side of it will probably take a little bit longer. I mean, last year was a pretty dismal performance, I think, for most foreign funds in India, not just hit by the markets, but also by the depreciating rupee at the time. So I think, a lot of funds will come back probably after the elections. But I think, as I said, whilst there are concerns that it is more passive money because of the scenario I just gave you in terms of why I think those monies will continue and will stay with India. Will probably, I'm less concerned about that, unless there's obviously something that I missed globally, which would set a global risk-off trade, which I'm not seeing at the moment. It's more to do with the fact that the US, followed by China, followed by Europe very quickly, are all slowing, and that's changed the environment for the interest rate cycle from what it was back in December. So India missed out in the first 2 months of the year because there's a risk on trade. Emerging markets were the beneficiaries, and expectations of a US-China trade deal. India didn't perform. India's performed now, but it's still not one of the best performing markets by a long mile.
Andrew, the other bit would be that I would understand that because of the nature of the money coming in, it's getting marked to index, and therefore this big rally in banks and financials. I would presume that's the reason. But for you who has the choice of putting the money depending on where you find value or growth, would you be comfortable putting large sums of money into banks and financials now, if you have that time horizon of 3-4 years before you got to withdraw that money? Or do you believe that now the valuations are just a bit too stretched?
No, it's a great question, and it's a very easy answer for me actually, because if I'll kind of throw a question back with you, but probably answer it myself for you. But if you think the economy is going to be, it's what, 2.7 trillion now. If you think it's going to be 5 trillion in the next 5 years or so, what's for sure is you're going to have a huge banking and financial services sector in India. So over that period, you're going to see some huge returns from the banking sector, notwithstanding some of the problems. So the private banks is naturally where you go to, for that kind of growth, expectation of the economy, and the ones who would be able to kind of be nimble-footed enough to get there. Some PSU banks will get there too, there's no doubt, but not all of them. And then selectively, obviously, on housing finance and NBFC. So that's where we are. So our view is that any kind of market setback, and any of these companies which get, banks which get hit for any reason, is just a good buying opportunity. So both in a short-term view and a long-term view, the banking sector is where you need to be to make good returns over a short and longer-term period.
A follow-up question. Assuming that, wear the hat of an investor who is not wanting the 8, 10, 12% return, but slightly more. Would you believe that the mid-sized banks would give you a better chance of doing that because that's the popular notion? Or would you believe that the large banks, corporate-facing banks, where the valuations are a lot more reasonable, would be better bet? Simply put, the ICICI Access Yes Bank variety, or the DCB, Federal Bank, IDFC First Bank kind of variety? What would you prefer?
I like the larger banks because I think they have the balance sheets and where to kind of grow with the economy, if not grow faster in terms of their growth. I mean, you've got legacy problems with a lot of banks, and that they just don't have the balance sheet or the nimbleness to kind of act quickly, whereas the banks you've mentioned do have that. And the interesting thing is that all the banks that you mentioned by name in terms of the ICICI, Access, have all got new management. So there's a new kind of there's a new kind of sheriff in town who's really kind of changing how those banks are going to move forward. Maybe a little bit more aggressive than before, a little bit more kind of regulatory kind of kind of looking at the regulations a little bit more closely for governance. So all of these things I think will play out equally for each of the banks, and I would really go for for the large cap banks rather than the mid-tier banks at the moment. You will make money, don't get me wrong, but you just got to be on top of what those banks are doing at the mid and small size or PSU banks, because the management for some of them change quite often, particularly in PSU banks. So you never really get that continuity of strategy because people keep coming in and changing things. So I think the whole banking sector will be good, and I think you can have a basket of large caps with a few dotted mid cap banks as well, along with NBFCs and housing finance companies. So that's the way I look at the financial services sector. It's going to be huge, and you'll make money across the board, but individually you might do better in one or two than the others. But I think overall, if I want to sleep best at night, then I'd rather keep in the large caps.
All right, back to the markets then. I just want to quickly take a look at some bigger movers within the broader market space, because today's day looks like somewhat of outperformance is coming from the mid caps and the small caps versus the larger universe. So GMR Infra now is moved up quite smartly. We've been talking about the stock and the performance thereof. So right now, okay, that's up about 1.5%. SML Isuzu is up 16%. Magma FinCorp is up 11%. Himmat Sinka Steel, that's up about 11%. And ICICI Pru, which we just discussed, is up about 10%. While we spoke about what's working for ICICI Pru, Manav, if you can come in on the stock price, I mean, while the offer for sale happened somewhere closer to 300, it's been pretty nicely absorbed in 350. Would you be a buyer in ICICI Pru?
Actually, if you're looking at the chart on the weekly perspective, it faces stiff resistance around the levels of 355 to 360 on the upside. Most importantly, it has been forming a good base on the lower side, which is now the support of 320. I sense looking at the overall formation, it's a very high probable that it may see a breakout of its important resistance zone, because it's been backed by very strong volumes recently, and going forward, if 160 is breached, you could see the levels of 385 and 400. So definitely at the current levels, basis on the immediate structures, this is a buy, and onto the dips of 340. So a stop loss of 335 can be placed, and eventually one should look to ride this stock towards the levels of 380 to 400 levels.
Okay, certainly doing very well for itself. The other set of stocks that I just want to very quickly point out are Reliance Nippon Asset Management and HDFC AMC. On a very buoyant day like yesterday, HDFC AMC was very, very quiet. I don't know what the point is today. Yes, it's about 3% higher. And Reliance Nippon Asset Management is the other one, which has also done well in the session today. So the AMC companies are doing okay. Bring up Motilal Oswal. That stock also has a large portion of AMC earnings now to itself. And let's see what that is doing. No, not too much. That one is still very, very flat. But the other two pure play AMC companies have done reasonably okay for themselves in the session today. What's not done well? We've highlighted some of those stocks. Sheela Foam, for example, continues to remain under pressure. Even now, corrective in trade, 2% lower though, not too dramatically lower, despite the OFS price being quite low compared to what it was. And we've been speaking about how some of the quality names have bounced back very, very smartly. So while Page Industries was one which from 21,000 odd went up to 25,000, Symphony is the other one. It hit a low of 900 or 850 or thereabouts. From there, it's back to 1388 and currently trading 3% higher. This is almost at the highest point in the last few months, I would reckon. Before we get in our fundamental guest, just a quick thought out here, Manav, on Symphony. It's not a high volume stock, but what do the charts indicate?
Absolutely. In fact, the prices have been since last few months, like you mentioned, there has been continuously been forming a series of high tops and bottoms, and in fact, we have seen a very good strong closing which is likely to become today, and basis of that I think this trend is likely to continue. There has been a good range shift internally in the pattern structure, and this is indicating that most probably the stock is well poised to even continue this rally towards the levels of 1420 to 1450 on the upside. I think anyone who is currently holding onto the position can continue to do so for at least the higher targets, but for a purely risk reward ratio basis for a trade setup I don't recommend this. But eventually if there is a short term dip towards the levels of 1350 is when you can look to enter. Even the trend is established, so I think one should not be trading for a short term perspective but keep a medium term positional view for high targets.
Okay. Stay on, gentlemen. So much more to talk about. Let's talk about some of the top stories of the day. So first, as we near the end of this financial year, it's time to look at how markets have fared, how individual components have fared too. Today, Darshan is, of course, taking a look at the 50 stock benchmark Nifty and the key stocks that have influenced its performance this year, done well or not. And Darshan, it's not the best year for the Nifty, but what did the top movers do and why?
Yeah, so okay, first of all, we'll highlight on the Nifty 50, and as the days progress, we'll move on to the broader markets, which have clearly underperformed. For the Nifty, the traction, if you're looking at it, a market cap gain of almost 2.2 lakh crores is something that we did. So the market cap increase, we're almost at, that was the traction, but it was the highest since that we saw. In fact, it was the lowest that we saw since the decline we saw in 2014. So it's not been the best of years as far as market cap growth is concerned. As far as the Nifty is concerned, the Nifty did manage to give positive returns, but that was on account of select few stocks. Not everything did manage to rally. So Nifty is up 14%. The clear winner has been the Nifty Bank, which is up almost 23%. Counters the HDFC, the IndusInd Bank, Bajaj Finance. All these banks, financial institutions have managed to do well in trade, but there has been a lot of negative traction on the Nifty mid cap and small cap end of the market, which are down in trade. So just to get a sense of what's happened as far as the entire year is concerned, the best performers include counters like Bajaj Finance, Axis Bank and Reliance Industries. What has not done well are counters like Vedanta, Indiabulls Housing Finance and Tata Motors. So we'll dwell in detail of what happened and why this move happened. First of all, as far as the winner is concerned, the big mover is Bajaj Finance. Remember, it did manage to correct very, very sharply post the entire NBFC liquidity issue that happened, but post that it's managed to recover almost 50%, and today it hit a record high in trade today at 3,000. If you're looking at the total AUM, look at the growth that has come in consistently quarter on quarter, year on year. They have been managed to grow. Even on a lower base, it was at 35%. So on a base which is growing, they're growing at almost 40%. And the third quarter was the number that gave the market the confidence that despite the liquidity issue in the NBFC space, Bajaj Finance continues to grow robustly. So that was Bajaj Finance. As far as his assets book is concerned, look at the correction that happened from a peak of 3,000. It fell almost 33%, and strong bounce back again now at record highs. It's managed to move. It hit the 3,000 mark in trade today. 3014 was the lifetime high that it hit. So Bajaj Finance is the first stock. The other one was Reliance. Three broad businesses: oil business, retail and Jio. All of them did extremely well. Jio, they have been gaining market share significantly from competition. The ARPs are positive, it's EBITDA positive, so Jio is doing well. The retail business has continued to do well for the company, and basically the oil business is the cash cow of the business, and that does well. What did well for Axis, and the rally started post the change as far as the management is concerned when the new CEO came in. Change in top leadership was the big reason why Axis Bank did manage to rally. Apart from it, the optimist target of almost 18% ROE growth is something that they have indicated. That's the guidance that they have given, worked well with the analyst community. Apart from it, the other factors that you need to watch out for: they expect operating efficiency to come in, lower credit cost to come in, so that's positive for them. So that's doing well in trade. The stress pool decline with improved asset quality is something that was seen, so the asset quality seems to be improving. And finally, the watch list shows moderation in corporate slippages, so that was the trend that we saw as far as the gainers were concerned. Now, as far as the losers are concerned, what we are seeing is there were three counters which did manage to drop in trade. The first stock is obviously JLR, Tata Motors. Ever since the positive growth in May 2018, it's been clocking negative JLR growth. JLR is almost 90% value for Tata Motors. Remember, the big 27,000 crore loss that came in. The other factors is that the financials are very inconsistent for Tata Motor at this point of time, and there's uncertainty over Brexit. The second point is we're looking at is Indiabulls Housing Finance. Disbursements has fallen, AUM growth has slowed down significantly, and because of the stress in the real estate sector, Indiabulls Housing Finance has been hit very badly. And finally, Vedanta, commodity prices have come off significantly. Aluminium, copper, zinc and Brent crude are the four commodities it deals with. That has come down, and that has impacted the EBITDA margins for the company. But corporate governance issues also played out on Vedanta when they paid 1,400 crores to Vulcan Group for the Anglo-American stake that came in, which was not taken very kindly by the street. So markets, Nifty did well in trade, but mid caps and small caps continue to bleed as far as this last 12 months are concerned.
Right, Darshan, thanks a lot for that. So that's the performance that's been seen on the Nifty 50 stocks from the start of the year. Moving on, the cement sector is in focus. Goldman Sachs remains neutral on the cement space despite the recent price hikes. The note says that despite remaining strong, the stocks have priced in most of the upside. Nikki Mirshadani is here to tell us more. Nikki.
Thanks, Devina. Well, Goldman Sachs report on cement sector sounds pretty much neutral. It's pretty much neutral on the sector right now. It says that it's presently surprised with the kind of price hikes that have been taken in the month of Feb. But overall, they still maintain the neutral stance on account of three factors, which is the muted demand that they see in Q1 on account of election, the subdued construction activity thereon, the partial rollbacks that have taken place in the last 2 weeks, because of which the hike is expected to spread out or even out during the course of the year. And third is where the stock have captured most of the upside. On back of that, it's now shifting preferences to counter, which are expected to be more price beneficiary to the move. It remains confident on the demand growth story and has maintained that the cost pressures are now behind the industry. They prefer ACC over Ultratech, which is surprising enough because most of the analyst recommendation actually side in Ultratech, and that is mainly on account of attractive valuation and also the company's ability to go ahead and take a better position of the companies to go ahead and take a price hike. ACC has been upgraded. Potential upside is now 13%. For Ultratech, the counter has been downgraded to neutral from buy, and the target price has been revised with gives an upside of around 7%. Shree Cement, where they've maintained a sell rating, they've hiked the target price, but still, if you look at the potential growth for the company, that's a downside coming in at 2-3%. Overall, how the cement stocks are performing in trade, you would see the kind of uptick in ACC and Ambuja, and a slight amount of downtick coming in an Ultratech counter. Back to you.
Right, Nikki, thanks a lot for that. Just want to pull up Inox to see what's happening on that counter. The stock has seen a sudden surge. The last time we took a check was up about 7%. It looks like there's been a spurt of interest that's come back into the counter. Inox Leisure is the one that I'm talking about, and the stock's up 11.5% right now, 329. Remember, we've spoken to the management on multiple occasions about the growth plans for Inox, and they're pretty confident that they will continue this pace of screen additions. They're looking at about 850 screens across India in a few years to come, across various formats, looking at an all kids theatre. But this time around, I think it's mainly going to be the box office collections of the first quarter. It's been a strong release pipeline so far from the month of January. Many movies that have released have done well, likes of Gully Boy, Mahakarnika, all of these names that have really, Manikarnika, which have pitched in, and they've had decent to good enough box office collections. So all of them adding on box office sales. Food and beverage, for them, they've said that the margins have been good in the food and beverages segment. Advertising revenues for them have been coming in at a steady pace. So all of that adding together, probably working well for Inox Leisure. 329 on the stock right now.
Curiously though, PVR is not the one that has really gone bonkers. That's just about 2.5%. Though Yeah, I agree. Inox trades at a discount, but that stock is tempered, about 2.5%.
Yeah, so probably, I mean, the box office would be a common thread between both. So probably that could not have tilted.
The only thing.
The only thing that could have tilted in favor of Inox. But definitely going strong with the kind of presence that they want to be felt. Last time I spoke to Mr. Tandon, he said that they're not really geographically focused in terms of where they want to bring up new screens, but they're constantly looking to expand. South, where PVR has now got its presence because of its tie-up, that's another space that they're looking at. So, you know, probably maybe something on that front could keep the stock excited. We'll have to wait and watch. But as of now, the stock's up about 10.5%. Neeraj Diwan of Quant Securities is joining us on the show right now. Neeraj, thanks very much for taking out the time, and good afternoon to you. What's your sense right now on the stance that one needs to take on the markets, particularly the banks, because of the outperformance, the significant outperformance rather, that we've seen over the last 1 week?
Yeah, good afternoon. Yeah, definitely, you know, the kind of outperformance you've seen in our markets was something which was building up, because, you know, our markets were oversold. If we saw end of February, you know, so there was the possibility with the benign interest rates, with the global sentiment changing toward being more benign as far as US Fed is concerned. So I think all that was hinting towards a bounce back in the market, but this bounce back which came was pretty fast, and, you know, I think a lot of people were still caught unawares and not able to participate to the full extent like they would have, because people were waiting to see what will happen with the election results, or at least wait till the exit polls. But I think the market didn't give them the chance to wait. So now we've seen the last couple of weeks, you know, people there's again a renewed investment, you know, interest which is coming even from HNIs, besides FIs which are continuously buying into the market. And banking is one space where we've seen, we see that even on a day when maybe some private sector banks may correct, but then there will be PSU banks will be filling in. So Bank Nifty that way has been pretty good. And now also, even after the run up that we've seen, there will still be value in the BFSI space, whether it will be some PSU banks or some NBFCs. So even from current levels, you can make a case from some value buying even among the banking sector as a whole.
Interesting. We were talking about Neeraj, these exhibition companies. First up, what the PVRs and the Inoxes have done. This whole media space. One is the exhibition companies and tiding over the threat of OTT taking over and disrupting their business. But two, what's happening to the others as well. The TRAI order already effective, but comes into notification I think from April 1st. And what does that do to the earnings of some of the broadcasters as well? Where are you within this pocket? It's a very wide bucket of a lot of mid-sized companies. Anything that looks interesting, and why so?
See, basically, like I was listening, you were discussing Inox. So Inox is, we've been tracking PVR for the last, I think, almost 7-8 years. So when PVR was, a mid cap or small cap stock, so we've seen the growth which has happened in the sector. So I feel when you see the valuation difference that is there between PVR and Inox, I think one can make a case of a value re-rating in Inox also, because they also have growth plans, they're also adding screens, and you've seen that when you have a good year with good movies releasing, the footfall really increase a lot. And I think that there one can look at something like Inox, which because of valuation difference can still do well. And I'm even looking at what's going to happen with Z, because Z is also looking at selling some stake. So what valuation that happens is what is important to how we can value the broadcasters. So I think for that space I am right now only wait and watch and see if there is a case to invest at these levels or not.
Okay, stay on, gentlemen. So much more to talk about. We need to slip into a break at this moment, but on the other side of the break, we continue our conversation with all of our experts. We of course get you the Fab 4 stocks of the day at 3:15. We get you what daily rooms are recommending, and then some closing strategies. Stay tuned to Bloomberg Quint Live. Back with Countdown right here on Bloomberg Quint. We're still steady at those levels where we were when the show started, about 0.5% up for the Nifty Bank, 0.25% lower for the other benchmark indices. What Europe is doing should come up on your screen in just moments from now. And my guess is that those indices are flat. Yes, they are. No big moves out there. The trade delegation from the US moves on to China tomorrow. I would reckon that until that happens and some clarity comes in, probably don't expect too many large moves on any of these indices. The yield scare seems to be over because the inversion has corrected itself yesterday as well. So that is out of the picture. But let's wait and watch what happens to the US markets today. Should be an interesting day. Yesterday was a good day. The S&P 500 snapped a 3-day losing streak. Let's find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. He joins in with that. Yash, good afternoon.
Good afternoon, Neeraj. I'll start with Strides Pharma first, and that is buzzing in trade today on the back of the double upgrade that has come in on the stock by international research firm Macquarie. Not only have they increased their rating from neutral to outperform, but have also hiked the target price now up to 532 rupees, and the stock is up about 3% ICICI Prudential is in focus, up 9% after the company's OFS has received a strong response. The non-retail portion of the OFS has received almost 3.96 times oversubscription after it got announced yesterday. United Breweries is in focus as well. There were several media reports that Heineken has raised its stake. We had a big bull deal today as well that saw about 74 lakh shares change hands. We don't really know who the buyers and sellers are, but we'll get you that information once it gets updated post-market hours. And the last stock I'm going to highlight is Inox Leisure. Some big moves seen in today's day of trade. At one point of time surged more than 14%, which was its highest move since August of 2018. Volumes too coming in significantly higher. Back to you.
Right, Yash. Thanks a lot for that. Back to our market experts then. And Neeraj, I believe you have a stock that you're closely watching out for. Neeraj?
We seem to have lost that connection, but this Neeraj can answer that question. No, I don't have any affinity for a stock, but I do want to mark a couple of them right now. Delta Corp, for example, Devina, 4.5% high. We're talking about everything related to entertainment doing well. This one has zoomed up in trade, 257 in counting. So really strong show put up by Delta Corp. Also, stocks which are trading at 52-week highs. Yes, Inox Leisure is one amongst them. But if yesterday was Pidilite's turn, today the two names that have done well are Bata India and Bajaj Finance. Now both of them are off from the intraday highs that they clocked in, but still going strong. Manav, to you on Bajaj Finance, the fact that it touched the high and came off, what would you do with this one? Because it's giving trading gains, I'm sure, to a lot of people, because the stock has been a bit of a trending stock the last few days. Would you take your trading bets off now?
Yes, in fact, the prices have seen a good rally from its recent lows of 2500, and without any brief correction that we saw even few days back, it was just a pause or a decline of 2 days, and the stock again resumed and formed a new high. Eventually, what we are seeing in last 4 to 5 trading session, Neeraj, is that there has been a decline in the momentum, and which is indicating that maybe from here on you may not see that kind of a throttle. But since the primary trend is on the upside, the ideal strategy would be wait for a dip or a correction towards the levels of 2800 or 2700. Eventually, that would be the right zone where one can look to buy it on the lower levels, and I sense that is where the mean reversion would also come in. That is also your 20 DMA moving average. So at the moment, I think one should not look in for taking some positional bet, but just if somebody is holding it, the best time is to book some profits at the current levels.
Okay. What about Brijesh? What about Bata India?
Neeraj, Bata India, the stock on a weekly chart, when it has broken from a bullish flag pattern at 700 odd level, I have been bullish, and I have been recommending your channel and different business channels also. Today's session, we have seen the stock making a new 50-week high of 1387. Still, overall, the trend is been intact if someone has a view of an investment. But purely from a trading bet, I would be suggesting now the time is little bit profit booking would be there. overall still till stock doesn't break 1250 odd level, one can take a buy call in it for the target of 1450 to 1500 odd level. But the longer term time frame of the chart has been concerned still till stock trades above 1200. I am looking a target of 1700 plus in 1.5 year time frame.
Okay, the stock though last 12 months has been up 85%. Neeraj Diwan is back with us. Neeraj, you're tracking TCI closely. That's something that you like. You got a price target of 349 on the stock. Tell us why you like the stock.
Yeah, actually this is a 1 year price target because in the first 3 quarters of this year we saw a good 18-19% growth on the top line and the bottom line. As we know that this company is into 3 segments. One is transport, one is supply chain management and seaways. So they've been growing in transport very well, which is about almost 25%. And even in the seaway there's a growth because of the capex they keep on doing by adding new ships. The supply chain management is one where the growth is close to 10-11%. So that growth should also pick up going ahead. So management is also expecting that the growth should be between 15-20% even going ahead for the next year. So based on that, at current valuation, if we value the company at 15 times, we get this target of close to 350. So that's why we're recommending this stock.
Okay, interesting. This whole space since 2014 was considered to be one which will really see a quantum jump. It hasn't quite done that, but TCI within that pocket has been the one that has actually enjoyed good moves. Neeraj, the other is this whole set of quality names, some of which would have gone down and stayed down, and some of which have bounced back. So you're looking at Eicher Motors, that's gone down, stayed down. Page Industries from 21,000 back to 25. It's not that the quarterly results have come out, but just the market belief in that. Symphony went down to 850 and is now back to 1400. So a bunch of these high ticket names, some of them have bounced back and some haven't. What do you do here? Which ones do you track the most, and which ones out here do you like as an investment candidate, if at all?
See, among the names you mentioned, whether it's Page or Eicher Motors, I think Eicher Motor in that category in 2-wheelers, where there is some disruption which happened because of the 3 years insurance charges which the customer has to bear, and now the ABS and some rules are coming in from April. So in the short term there is still not clarity how the demand from the consumers will behave. So I'm not really looking at 2-wheelers for that matter right now. But as far as Page is concerned, I was not comfortable with the valuation even when the stock had gone to 70-80x. But now, even after the correction, I don't find it cheap. So basically our investment thesis is that we buy stocks only when we have valuation comfort. We may miss a rally in a stock, but we will not buy something which is 40-50x or 60x on valuation. So we'll really avoid these stocks. But among the stocks that we cover, there are some mid-cap stocks which had done very well earlier, something like a SRF, something like a Avanti Feeds, which SRF, if you see, has not really corrected only because the kind of capacity expansion which is happening and the continuous demand from their specialty chemicals because of clampdown in China, which is continuing. So that growth will continue happening there. Or something like Avanti Feeds, which had corrected because of some seasonal factors in the business is concerned, which going ahead will neutralize and will start picking up again. So we will still look at stocks which are still reasonably valued and go for valuation comfort when we are investing in a stock.
Okay. Well, corporate facing banks are the other pocket that are just doing extremely well right now. Yes Bank up 6, IndusInd Bank is up 5% at 1801, and along with Yes Bank, of course, Indiabulls Housing Finance continues to rise and shine. So that one too is doing well. State Bank of India is at 308 itself, so good going here. Vedanta at 175 is packing a serious punch too. A lot of gains are just so concentrated so well in the large caps, difficult to take your eyes off that. And then just before getting what dealing rooms are recommending in the session today, a quick check of what's done remarkably well at the broader end of the spectrum. Now they've been highlighted SML Isuzu, so that one is fine. Himmat Singh Asir at 220 is up about 10%. I wonder if the other aviation or other textile companies are also doing well. But Himmat Singh Seed certainly is. So that one quite strong. I wonder Indocount is the other one we should try and pull up, because that too, along with Himmat Singh, had a bit of a brief run upwards. In today's session, Indocount isn't quite able to do that. But Himmat Singh Seed certainly doing well for itself. Neeraj, any thoughts on ICICI Prudential? Since we're talking of stocks which have done very well, 9% higher, 349, the selling absorbed well, valuations in favor, good to buy or no?
I think I think even at these levels there's definitely upside potential in the stock, but I would like to still enter around 300 310 levels. That would be a better entry point. But if you're looking at a 10 to 15% return for the next couple of years, I think even at these levels the stock merits a look at.
Okay, got that. Well, it's time now to take a look at what dealing rooms are recommending. Yatin Mota and Darshan Mehta are here with the channel checks. Darshan, let's start off with you.
Yeah, so some of the NBFCs have started to do well, and there seems to be a lot of accumulation that's happening. One of the stocks that's been spoken about is L&T Finance, which is up almost 2.6%. Decent volume build up, almost 11.5 million shares have already been traded. So that's something that dealers indicate that some of the HNIs are actively accumulating. So that's something that we are watching out for. The other one is Bajaj Finance, again hit a record high in trade today. 3014 was the record high in trade today. Has cooled off from that level, but nevertheless, dealers believe that the rally will continue in Bajaj Finance at lower levels. There is accumulation that they are seeing. And the last one is Yes Bank, doing well in a day in which the market is slightly wobbly. It's up almost 6%. If you see the exchange notification over the next 3-4 days, they have lined up several meetings. They are meeting some of the prominent funds, both in India as well as the overseas funds. So there is expected to be some bit of traction that would come in on the counter. But Yatin, what are you hearing?
Darshan, a few stocks to talk about, and Power Grid is the first one in the large cap space. Last week and a couple of trading sessions back, we saw some good traction in NTPC as well as Power Grid. Dealers still believe that domestic funds are accumulating power shares at low levels. So watch out for Power Grid. Dealers do believe that on the back of domestic fund flow, power stocks will remain under focus, and especially companies like NTPC and Power Grid would be on the top of the list. Raymond, again, remember they are having an analyst meet today in which they will be talking about probable expansion plans and plans on the real estate front at their Thane property. Dealers indicate that at current levels HNIs have been accumulating shares of Raymond. So watch out for this one at levels of 800. And Delta Corp, that stock is quite active, 4% up for that one. Dealers are talking about some corporate action and corporate announcement that could be there in the offing for Delta Corp. So this is one counter which is there on the HNI's radar as well. Volumes almost 20 lakh shares traded already.
All right, Yatin, thanks very much for that. Manav, tracking any of these names? Delta Corp being one, L&T Finance being the other?
Yes, in fact, these stocks, both these stocks are looking very well placed. Specifically about the Delta Corp, it has been forming a very strong base on a high time frame chart, and it has been consolidating since quite some time around the levels of 230, 240 on the lower side, and in fact it has been inching higher. It faces stiff resistance at the 265 levels, but eventually I see that breakout to happen on the upside, and in fact this is a stock which one should not eye for a short-term perspective. In fact, if that breakout happens, you could see a swift rally of another 20-25%. The risk reward ratio at the current levels is very well poised, and I don't see the stock go below 230 on the immediate basis, so it's definitely a thumbs up even at the current levels. For the L&T Finance, in fact there has been a good short-term consolidation and a breakout that has accompanied today on the intraday charts with good volumes. One could also initiate a short-term trading play on the L&T Finance. Looking at the NBFC space, we could see another upside of at least 3 to 4% in the near-term perspective.
While we are on this topic, the other one would be most of these brokerage names and how they've been doing over the last few days. Edelweiss, you've got a JM Financial, Motilal Oswal, IIFL Holdings. Today's session has seen some amount of interest building up in all. JM Financial actually up about 6.5%, so big move coming there. Motilal Oswal not doing a whole lot much. Would this pocket be of interest, Neeraj?
You mean the brokerage stock?
Yes, yes.
Actually, there's nothing in that stock which we really cover, so we'll not be able to comment on them at this current valuation.
Okay. Manav, on an Edelweiss that had nudged 200 from there, came off. It's at 190 now. Is there scope to once again push it back beyond 200?
See, actually, we have already seen a very good rally from its recent lows of 100, and on the upside, on a larger time frame, 195 to 200 are the series of resistance. I think in the near term there could be some sort of a cool off or a consolidation, since the prices have already seen a very good run up, and at the current levels there is no risk reward ratio for any fresh trade. In fact, there is a chance that after such a kind of a move, it could continue its consolidation in a broader range of 150 on the lower side to 200 on the upside. But given a choice, one should only look to enter at the lower levels, keeping 160 as an important support zone.
Let's get in closing strategies. Brijesh, I'll come to you first. Your top closing strategy.
I have two buy calls. No doubt the index right now in the position of hitting my target of 11,420. But PSU banks are looking good, whether that be Oriental Bank of Commerce or SBI or Union Bank. In that, Union Bank is looking good on a shorter term time frame, maintaining a pattern of higher tops and higher bottom formation. Somewhere around 93 rupees 80 paisa the stock has been quoting. So one can take a fresh buy call in it with a strict stop loss of 92, play for the target of 96. Second buy call would be an MGL gas pipeline, Mahanagar. On a shorter term time frame, the stock had made today a new 50-week high and it's been trading near that level of 1,028 with increase in volume. Even the oscillators are making the higher lows. So present rate can be used for a buying purpose with the stop loss of 1,015 and play for the target of 1,055 to 1,060 level.
Okay. Manav, what about you? That is a smart move though. But Manav, what about you? Your top recommendation?
I'll go for one buy, which is Shriram Transport Finance. In fact, there has been a very good volume breakout on the daily charts and it is above its 50-day average volumes. I sense after such kind of a move and a retracement breakout, usually there is a good price follow-up action that can be seen, and NBFC as a space is also bouncing from its oversold levels. At least in the near term, one can expect an upside target of 1300, 1320 on the upside. A stop loss of 1220 can be placed on the lower end.
Okay. PSU banks are doing well. Neeraj, we haven't spoken at length about this, but just wondering, PSU banks raising equity capital as well. A lot of them are out of the PCA, so normal business should resume soon or already under normal business momentum, and the resolution of cases would result in some of the return of assets or monies coming back to them. Aside of SBI and a BOB, is there a PSU bank that is worth looking at, or would you avoid that pocket right now?
No, definitely. I think I feel that PSU banks from these levels can give a decent return over the next couple of years. So Bank of Baroda would be a large PSU bank which should not have been in this price right now. Because it is happening because the merger which happened, so the stock had corrected. So if you see the comparison with State Bank, the kind of rally you've seen in State Bank now, it is almost only 10% away from the 52-week highs. So I think Bank of Baroda should also been at a higher level if the merger has not happened. So even at the current price, I think Bank of Baroda has a case for a good upside from current level. So among the PSU bank though, in the same order, I like Bank of Baroda, PNB and Canara Bank. So I think there is potential and one should stay invested or even buy on dips or even at current levels if you are investing for a couple of years.
Neeraj, we'll leave it at that. Thanks much for taking the time out and being with us. Appreciate your time. Fundamentally, Neeraj Diwan liking some PSU names. Brijesh, of course, spoke about how he likes a couple of these as well, so do watch out. So, slightly unusual names which are doing well today include a JSW Energy up about 5.5%. You don't normally see that. BSC as a stock has done well today, 4.5%, 616 and counting, so good going there. And after some time, we are seeing not just Shriram Transport but other NBFCs, Bharat Financial, L&T Finance Holdings, etc. too, do well in trade. So do watch out for those names in the session today. How about JSW Energy, Manav?
Yes, in fact, if you look at the chart on a medium-term perspective, it has been facing strong support. It has been defending a strong support of 60-63 since past 2.5-3 months, and this week, the kind of a reversal that it has formed, it is confirming a bullish engulfing pattern near the support levels, and this formation is hinting for few more weeks of consolidation and eventually a break on the upside. Neeraj, the power as a space is looking very well placed. If you look at the chart of Torrent Power, or if you look at also Tata Power and JSW Energy, it is forming a medium-term base. So I think in the near-term perspective, this is one sector which could provide a high margin of safety at the current levels, and eventually could see an upside of 15-20%. So JSW Energy is also quite well placed, and given a choice, a stop loss of 62 on a positional basis could be, and a long can be initiated. I think in the medium-term perspective, targets of 78 to 82 cannot be ruled out.
Okay, that's JSW Energy, and it's a bit of a lone warrior in the PSU space. We've spoken about gainers at length. Let's talk about some losers today. Power companies have come off. So Adani Power and Reliance Power and a couple of others. But power financiers too, the likes of REC, have come off. And then DLF is looking slightly wobbly today, 189 or 190. Real estate by and large was looking okay, but DLF, QIP done. That stock is looking slightly weak though in the session today. Brijesh, any thoughts on DLF?
No doubt, from the rally of 188 to the 204 or 5, the stock is witnessing a selling pressure. Anyhow, if we are not able to give closing above 192 or 193, the stock might break the recent swing low of 188 and will try to touch a level of 180. So if someone wants to go for a sell side, keep a strict stop loss of 192 or 193 and play for the target of 180.
Since you mentioned REC, should pull that counter up. Last 2 or 3 sessions have been pretty volatile for the counter. And not just REC, even PFC. The stock today is down about 2.5%. But as you can see, this entire week pretty gyrated in terms of the kind of moves that we have seen. PFC too, ups and downs on quite a few occasions. Brijesh, would you take a trade on an REC or a PFC?
Devina, REC, the target has been achieved. I was being bullish when the stock broke out from a level of 120 on a bullish flag pattern on the daily chart, and somewhere around 155 the target was there, and yesterday the stock made a high of 160, and after that we are seeing a profit booking. So at this juncture of time, going for a long side, I would be avoiding, but if it trades below 140 or somewhere around 135, then one can take a fresh buy call in it with a stop loss of 130, and then again look out for a level of 160 plus. Regarding with the PFC has been concerned, same formation has been there, but as compared to the REC, overall the stock has witnessed a selling pressure at 122 to 124 odd level. Right now the stock has been quoting at 118. Still, I would be avoiding. Chances are that the stock might try and trade below a level of 114. So at 114, one can take a buy call with a strict stop loss of 110, and then again look out for the target of 124.
Stay on, gentlemen. We'll take into final thoughts from you, but let's wrap up the markets. And in line with how we started the show, about slightly less than 0.5% gains for the Nifty Bank, slightly less than 0.5% losses for the Nifty and the Sensex. And the mid caps and the small caps marginally in the green. Actually, no, the small cap index, quite like yesterday, has had a very sharp surge in the last half an hour to 45 minutes and ending about 1.2% in the green. Well, the market breadth would also have looked okay. The BSE 500 index not quite, the mid cap index to 0.5%. Devina will speak about all of this. Let me talk about the large caps and show you what's moved and what's not on the indices. And let's choose the Nifty. Yes Bank about 6%, IndusInd Bank 5.5%, Indiabulls Housing Finance has a 2.5% gain to itself, JSW Steel, SBI, Z, Bharti Infra, Bajaj Auto, so varied gains, but private banks certainly right up there, State Bank of India too. So banks leading the charge. What's not done well? NTPC cooling off after yesterday's surge, or surge the last few days. OMCs by and large have looked slightly wobbly. And amongst heavyweights, Tata Motors by the way down 2%. But amongst heavyweights, the two stocks that stand out are HDFC and Reliance Industries. Both of them have corrected. Arguably, the top weightage on the loser side would belong to these two. But the broader markets, Devina, a surge in the small cap index, quite interesting.
Yeah, quite a few stocks actually doing well in today's session, contrary to what the large cap index has been doing. So for the mid caps and the small caps, it's a day in the green. You have the India VIX with the volatility also picking up in today's session by about 4.5% at 17 plus now. That's the small cap index, which is up about 1.2%. I'll start off with the gainers then. SML Isuzu is one stock which is held on to its gains since early morning. It's up about 16% and it stayed that way. As you can see, it's consolidated, gained 16% and just about sat put at about 824. Himmat Singh Ka Seed is the other one. Volumes have been higher for the counter and that's doing well. You have a Magma FinCorp that has gained in today's session too on the back of good volume. So that stock's up about 12.5%. ICICI Pru, 2 straight days of gains post the offer for sale. That's been absorbed pretty well. The stock in today's session too, adding on about 8.5% at 347. Avanti Feed, Inox Leisure. Inox Leisure actually had that surge in the last half an hour of trade and moved up pretty smartly. It was up about 7.5% post which it moved up almost 11 to 15% and then now has cooled off and is probably going to shut shop with 8% gains. GBK Power, not so much so GMR, though the news is surrounding GMR, but GBK Power in today's session has done okay for itself, close to 8.5%. JM Financial does well. From the PSU banking space, you've got an Oriental Bank, you've got an Andhra Bank. Both these counters have done well. They've got gains of closer to 4.5 to 5% apiece, so not bad going. And a Godrej Properties, it's a consistent performer. In the last 4 to 5 trading session, Godrej Properties has really put on a great show, now trading at about 850. Amongst the losers, while Godrej Properties in the real estate space on one hand is up 5%, Prestige Estate loses some steam in today's session within the same pocket, about 3.5% lower. Arcom is down, Jubilant Life Sciences, and this is a consistent loser. In the last 3 trading sessions, the stock has given up, and today's session too adds on some losses. Vodafone Idea, Dabur, DLF looks a little bit weak, some profit taking off the table for DLF, so that trades closer to about 190 odd for DLF, and an NMDC looks weak by the end of trade today. That stock's at 101, down 2.5 odd%. So divergent moves within the broader market space in the large cap index, but not all that bad.
Not all that bad. Let's wait and watch. Tomorrow expiry day should be interesting, but I would reckon the volumes today too could be on the higher side, at least the F&O volumes, because it's the penultimate day to the expiry. Well, actually all kinds of, on the cash and F&O, both the sides, the volumes are substantially higher, Devina.
Yeah, 4,000 BSC cash, that's much higher than what we've been usually seeing on the BSC cash market. NSE cash 37,000 crores and F&O 17 and a half.
Substantially high volumes. Let's see what the FI numbers look like. Yesterday was a 1,000 crore plus number. The losers, the contributors, and HDFC and Reliance should be top draw. Yes, they are. HDFC Bank follows suit, and then TCS. So amongst the key heavyweights losing out in the session today.
Well, Yes Bank, Anderson Bank, though not being really heavy weights, the quantum of the gains probably puts them right at the top. And SBI has actually been doing well pretty silently over the last few days. It's sort of hidden in the in the mix, but it's adding on some weight.
It certainly is. And did the market breadth improve? Just very quickly show that towards the close, because the small cap index certainly revved up. No, not quite. That's interesting. The breadth actually opened up a little bit, but well, interesting moves nevertheless. I can't quite figure this out. Final thoughts from our experts. Brijesh, to you first. The Nifty Bank, what levels would you believe it can have in expiry tomorrow?
No doubt PSU Bank supported the Bank Nifty, otherwise we would have broken the 30,000 odd level. But the support which I am looking right now is 29,750 to 29,800 zone. So keeping that in the mind, I am assuming that yesterday there might be a small profit booking, but expiry might be above 30,000. So I am looking Bank Nifty should be expiring in the range of 30,000 to 30,200 zone, whereas the Nifty has been concerned almost 11,425 recent swing low was being made, and after that we have seen closing somewhere around 11,445 zone. So till 11,400 doesn't break, it would be good. So expiry for Nifty has been concerned. I am looking Nifty would be expiring somewhere around 11,470 to 11,500 zone.
Okay. Manav, what about you?
See, I sense at least for tomorrow, 11,400 on the lower side to 11,500 would be the broader range for the Nifty on the expiry day, and for the Bank Nifty, it should be around about 29,900 to 30,000. I sense looking at the overall formation, there has been important formation which is indicating that there could be some sort of a pause at least tomorrow. It's unlikely we will see an upside continuation momentum. So basis on that, I expect it to be overall sideways to range bound momentum at least tomorrow on the expiry day.
All right, gentlemen, we'll leave it at that. Brajesh as well as Manav, thank you so very much for joining in. Appreciate you taking out the time. On that note, we're going to wind down countdown. Thanks a lot for watching. From Neeraj, myself and the entire team, let's put this show together. Coming up next is the Market Wrap.